Another day, another round of headlines that could shift the course of the U.S. economy, from bank stress to global diplomacy. Here's what's new. One, banks tapped the Fed for $15 billion in short-term liquidity. 2. Zelensky visited Washington pressing for missile support. 3. WTO warns U.S.-China trade clash could shrink global GDP by 7%. 4. A Fed leader signals he may back a rate cut in October. And 5. Treasury yields plummet to their lowest point this year. Let's break down what's happening, why it matters, and where this could go next. 1. Bank pressure and liquidity stress. Over the last 2 days, U.S. banks borrowed more than $15 billion from the Fed's standing repo facility, a rarely used backstop for short-term cash strains. Normally, this tool is quiet, but using it now suggests the Fed's balance sheet reduction, quantitative tightening, is putting pressure on liquidity. If banks need this kind of help, it's a signal that interest rates, capital constraints, or funding stress are starting to bite. 2. Zelensky in Washington. Global and economic stakes. Ukrainian President Volodymyr Zelensky visited the White House, seeking Tomahawk missiles and security guarantees.
Today, of course, we want to finish this war, but the war is another technological war. You don't use just Tomahawks. If you want to target a military goal, you need thousands of drones. It goes together with such missiles. Ukraine has such thousands of our production drones, but we don't have Tomahawks. That's why we need Tomahawks. But the United States is a very strong production, and the United States has Tomahawks and other missiles, very strong missiles. But they can have our thousands of drones. That's why where we can work together, where we can strengthen American production.
And so Trump, while non-committal, left the door open to drone for missile exchange.
Yeah, we would. We have a lot of drones right now. We build our own drones, but we also buy drones from others, and they make a very good drone. I mean, drone warfare has really come to the fore over the last couple of years because of this war.
According to Time, Russia reacted strongly, warning that missile transfers could damage U.S.-Russia relations. Economically, this meeting underscores how defense, energy, and supply chains are intertwined. If Ukraine's access to rare earths or energy infrastructure is at play, it can ripple into tech, mining, and trade sectors globally. 3. WTO warns of global fallout from U.S.-China trade war. The WTO chief urged both nations to cool tensions, warning that a full decoupling could reduce global GDP by up to 7%. China has imposed export controls on rare earths. The U.S. retaliated with threats of 100% tariffs. For the U.S., continued tariff escalation risks higher consumer costs, disrupted supply chains, and retaliation, which could erode some of the gains from domestic growth. 4. Fed signals. October rate cut may be coming. St. Louis Fed President Alberto Musalem said he leans towards supporting a rate cut in late October, contingent on inflation and job data. That's a meaningful shift in tone. It suggests some Fed officials are more comfortable easing, even with risks of inflation persistence. The market might price in that possibility, influencing bond yields, mortgage rates, and investment flows. 5. Treasury yields fall. What investors are doing now. The 10-year Treasury yield dropped below 4%, the lowest of the year. That reflects a retreat to safety, signaling that bond investors may be losing confidence in near-term growth. Lower yields can ease borrowing costs, but they might also reflect expectations of slower growth or policy stimulus ahead. We're seeing forces converge. Bank stress, global diplomacy, trade risk, monetary shifts, and safe money flows. Which one will reshape the trajectory of the U.S. more? Tight banking conditions, trade tensions, or a pivot by the Fed? Drop your take below. Which headline matters most, and how do you see this reshaping the American dream? Stay tuned!